What's up, everybody? Good morning, good afternoon, good night, wherever you're tuned in from. Welcome to the BitLab Academy, daily stream. I was drinking a little bit too much coffee this morning. Woke up early, had a lot of stuff I had to do last night, and basically flew into New York and had to get my whole new media set up here at my desk. I had all my gear with me in Atlanta, so I had to reset up everything. Let me know if the audio, visual, everything is working, because it's kind of hard to test this without going live. So throw a 1 in chat if all of, actually throw a 2 in chat if all the audio and visual is working. You can hear, you can see, everything's feeling good. We're going to be breaking down everything going on. We're going to be breaking down what's going on in the charts. We're going to look at some levels. Are we about to break down? Is September going to be a bloody month? Historically, it looks like it has been. And in addition to that, we got some charts and other things that can provide us some context about where we may be going. Could we have that continuation to the upside? We are in a position on Bitcoin where, yes, it could go up and could go down, but it's all about stacking those probabilities. And that's one of the reasons why you see Ray Meeks there in chat was posting earlier. He's our main dev here on the BitLab Academy team, also the master of our Discord. By the way, if you're not a member, we have a free section of the Discord, so definitely get involved in there. When we do our prizes and giveaways, that's where you go in to claim. Get involved with our community. Of course, if you are a BitLab Academy All Access member, you have access to the premium Discord. And then we also have the BitLab Trading Stack with all the indicators. Ray and I basically worked to provide all the signals that really provide you deep alpha and also give you some sort of foreshadowing of how to set up those probabilities to your favor so you can take action in the chart so you can dominate this market and not let this market dominate you. So we're going to be breaking that down. We're going to be breaking down TA. We're going to be breaking down all kinds of things. If this is your first time here, I guarantee, or at least hope, this is not your last time here. My name's Kellam. Welcome to the BitLab Academy daily stream. And we're going to be starting at 10:30 a.m. Eastern time for the time being. I've got a lot going on in the background at the moment, and it's hard to do this one and the afternoon stream at 3 p.m. And I will be doing the afternoon streams at 3 p.m. as often as possible. There will be one today, and I'm not sure if there's going to be one tomorrow because I have some things while I'm in New York I have to do tomorrow afternoon. I'm going to try and get it done as soon as the morning stream's over, and then we'll see if we're going to be able to get that afternoon stream going. Now, everybody in the room, hit that like button, hit that subscribe button, ding the bell. Let's go ahead and break down what the heck's going on in these markets. Bitcoin, let's start here. Bitcoin, we had this great pump. I mean, look at how fast this fell. Massive amount of inefficiencies here, meaning there's no price action, stair stepping to the downside. It's just falling, a little bit of hesitation, fall, expansion in the momentum to the downside right here. Why do I say that? Larger candle, moving more quickly to the downside. Start slowing down, we get that. We see a lot of volume, selling volume here, which is why these candles are purple, part of the BitLab Intelligence indicator as well. Remember, on the BitLab Intelligence with these teal candles, this is a lot of buying volume coming in. Then, of course, we get this stopping volume candle. It's yellow for both bearish and bullish in terms of a lot of selling pressure, stopping volume, a lot of buying pressure, stopping volume. And you can see this has a pretty solid hit rate as to change in trend. That doesn't necessarily mean reversal. It means a likely pause in direction, and that could be a consolidation or a reversal. So it's always important, no matter what indicator setup you're using, even if you're, let me go ahead and save this. Yeah, even if you were using something like, where's my MACD? Like MACD, stochastics, RSI, even if you're using a setup like this, you don't trade just on the stochastic crossing or just on the MACD flipping from bullish to bearish or seeing something in money flow. What you want to do to have a high consistency hit rate that can stack profits rather than stack losses is you want to find a signal that gives you an indication something's setting up, and then find a supporting signal, and then find a confirming signal. I always look for a minimum of 3. It's wonderful when you get 4 or 5 of those signals all in agreement with the setup, support, and then multiple confirmations. Similarly, when we come back over here to the BitLab Trading Stack, you may see stopping volume, but if we have not yet, for instance, on the momentum wave down here on the BitLab Trend Fuel, we have not got this triangle yet showing this expansion and negative momentum to the downside of trend. This triangle shows that the momentum is starting to basically now contract back towards. It's not necessarily bullish, but it's saying this expansion to the downside is now clipping back into the opposite direction and coming back towards the zero line, suggesting momentum is starting to reverse. So we have one signal, two of these stopping volumes. On this one, we still have a lot of selling momentum, selling pressure here in these red candles on the negative momentum wave here. And then all of a sudden, on the second stopping volume, then on the next candle, we get that triangle, and we get the triangle stopping volume, and we can see also the price structure is starting to, it's not expanding. It's not expanding still to the downside. In fact, it's rounded here. We had a pretty hectic wick to the downside. Bulls bought this up and they said, no, no, no. And we're seeing that this is not continuing to the downside. And what do we get? We get consolidation all the way through till we sort of meet this weekly VWAP. And by the way, secret little trick here with the BitLab trading stack, or any indicator package you use. In this case, on the BitLab trading stack, we have the weekly VWAP right in here. We see as soon as we get to it, we start getting a little bit of a rejection here. We're fighting it. We finally break above it. In fact, we even break above the trend signal line, but it's not looking like there's any increased momentum to the upside. We see the stochastic, the RSI is still roughly around the 50 zone. And in fact, at this zone where this pushes up above the trend signal line, we see the RSI actually get rejected and come back below 50. And so we're not getting, although we broke the trend signal line, we're not getting that support and confirmation signal. So we don't take that trade, right? We want multiple different things in agreement. So this gets rejected back below. In fact, it comes back below the weekly VWAP. It comes across, finally takes out the trend signal line as well, and it's being held right under this weekly VWAP. We see this right under this yellow line. And finally, where do we get the pump? Right as we break and clear this previous high, and we get a lot of buying volume here. In fact, we also have, you can see a lot of buying pressure, buying pressure in the momentum waves here, where this is these green bars. These are all white, and you see these flip green right here. Now, what are we doing with this? We've talked about this for a couple days, and we're going to be breaking this down in more detail here in a little bit. But just because you get a green candle doesn't mean it's going to be green candle continuation all the way back to $70,000 and then $100,000. Everything works in levels and basically taking the stairs up. You're not going to get to previous all-time highs and then into price discovery without doing the work to get there. Does that make sense? In this case, this is a little bit of work, yes, but in fact, we've talked about this. If we do a Fibonacci option F from there to the bottom, we can see this breakdown point right here to the low. And I'm doing it rather than doing it all the way. We can do it all the way down here. Candle bodies get rejected at the golden pocket. If we do it from the candle bodies up here, or from these wicks here, the wick, if we do it from these wicks, look at this, the wick gets rejected at the golden pocket. So either way, you're measuring this. This is getting rejected regionally near where the golden retrace zone is. So this doesn't mean the bull, the rushing in of the bulls and the sentiment is completely gone. But as it stands right now, this stopped at a necessary level. So let's note that it's not just getting rejected at the 382, which shows a massive amount of weakness for the bulls. It's getting rejected at a known retrace level. So on this small on this small pullback on this initial move that we're having, this is okay, because one, we're getting rejected regionally in the golden pocket zone, and currently we're still holding above the 0.5. In fact, if we came all the way down to this 382 and these previous highs, that would still be okay. I would start really getting worried. I would start to really get worried dropping below 26,000. 26,008, about 830, because that's where the weekly VWAP is, and that's also directly below where this 20 moving average is. What do I mean by 20 moving average? Part of the BitLab intelligence. We have this EMA ribbon as well as this 20 exponential moving average right here. And this is finding support above that. So as it stands right now, there is still hope for the bulls. But remember, we do not trade on hope. We trade on strategy. We trade on where the stacking or the probabilities lie. So let's talk about this. Let's kind of get out from the chart for a second. We're going to dive into some of the other things that we're looking at, what's going on around the worldwide web of crypto, and we're going to talk about basically set the context for what we're going to be diving into here. Now, I just want to make sure everybody, before we get started, head over to the BitLab Academy Twitter page. Make sure you're following, hit this retweet, hit this like button. You will be entered to win. Yeah, you will be entered to win. We will be drawing tomorrow. So get involved. Get involved. And if we get, we have about 55% of the people that watch here on a daily basis are not subscribed. So go ahead and hit that subscribe button. If we get, we have 9,068 subscribers right now. If we get 100 subscribers today, we will do another giveaway today, and we will be drawing specifically from this, the people that are retweeting and hitting that like button here. So let's go ahead and continue on. What do we want to talk about today? Let's remember where we're at in the cycle. Let's not get so worried about small pushes in price. You know, $1,000 move 5 years ago would have been an astronomical move. But remember, we're, you know, $25,000 plus. We're $27,000. In fact, we pushed over $28,000 the other day. So $1,000 move, you know, is a good move. But when you look at it in the context, I mean, you could even see it right here. See this small move right here? There's so much work to be done, and that's okay. We're here for the work. But what I want you to pay attention to is these three cycles that are here that are measured out from when a halving occurred, where the all-time highs were on these three different cycles, where the lows were. Look at these lows lining up, and where we're at moving into the next halving. So we have this pre-halving pump. We have quite a few on the 2015 cycle where we have this long consolidation with pumps and drops within this. It's a pretty large pump, medium-ish drop here, another decent sized pump, and a lot of consolidation. On 2018 into 2019, we went from $3,700 all the way up to just shy of $14,000. And then, you know, slow bleed down. And then, of course, we had that global economic shutdown. And then post-halving, that's when the parabola really started to take off. So if we look at the two different aspects here, from this pre-halving pump, which was pretty substantial, to the bleed off, and this, I mean, in reality, what we're doing right now, there's nothing out of context for what's happening right now. And I'm not worried in the slightest, even at the price were to really push down and tap down here near this realized price level, you know, which would be, you know, quite a bit lower, then it still wouldn't bother me. I mean, we did this in the 2019 sort of into 2020. 2020, it took the global economic shutdown for price to get all the way down to realized price. And what happened? Turned out to be an absolutely phenomenal entry for the crypto markets, for Bitcoin specifically, especially post market cycle low. We come back over here, forming a new higher low, and dropping below that realized price. What has this shown? Each time prices drop below that realized price, excellent opportunities for entries in the market. Of course, we dropped right here. Now, does this mean that this was a bad entry? If we dropped here and then it's up, and then, oh, we have the FTX collapse. No, things are going to happen. And this is why it's important to understand what your time horizon is, and to look, especially when you're near market cycle lows. When you're identifying where you're going to start scaling into the market, you identify those areas and you stick to your strategy. And if you do buy here and it drops down here, it's not, damn it dropped lower. It's like, oh, I can lower my average entry because this is still a good, not only a good, but better opportunity than it was here. Now, my argument would be, and this is not financial advice, is I don't buy the second, for instance, on this large bear market, I don't buy the second price dips below the realized price, because we've seen consistently it barely dipped below it here, barely dipped below it here again. So what I like to do is look at where that price action of Bitcoin is dropping below the realized price level, and then patiently looking at all the other signals, zoom in from the macro, get down into the daily, get down into the 12-hour, the 8-hour, and start looking for bullish divergences on RSI, on stochastics, or on the BitLab trading stack on the momentum waves, and identify, okay, we've already dipped down below the realized price. This is suggesting that a bottom is near. And then you can start breaking up your entries across all these points. Now, where we're at right now, of course, I think, and I could be wrong, I think this market cycle low has been put in. Let me know in chat right now, do you think the low has been put in at 15.5, 15.6, or do you think that the price action is going to go below that? There's no right answer here. It's all based on what your strategy is, what analysis you're doing. I believe it's in. So identifying these areas that I was scaling in, where we're at here is presenting another opportunity before the halving to start identifying more price levels for entries to DCA into, to break up some entries, to take advantage of the post-halving push. Now, if we really consider it, remember, we've talked a lot about what's coming here in April of this next year, and it's not just the fact that we have the halving coming up, but if we take this out, look at the 3-day, let me zoom out on this. If we take this out and look at the 3-day, we've got, I mean, this is the global economic shutdown. The halving is about right here, and price action goes up. Now, it's not guaranteed, but what's different this time? Things are absolutely different. The global economic context causes some uncertainty, but we also have the best setup in the history of Bitcoin, with all of these huge Bitcoin spot ETF applications that are in. We just had a win from Grayscale against the SEC. There are people in our government that do have a couple brain cells, and they're starting to push back a little bit and saying, what you're doing is unfounded, and this is, you need to review this. Other people need to review this because your decisions are not based on well-founded considerations. We got BlackRock entering the foray. We all these things we've been talking about. None of that's new. But if you're scared right here when we're on the cusp of having trillions of dollars in global markets, on the brink of having the ability to get exposure into Bitcoin, and we see the world's largest asset manager speaking highly of it, and we're starting to see things like on Gemini where you can see their exchange balance, and you can see that in the matter of a couple days that the exchange balance of Bitcoin dropped 30,000 Bitcoin. What could that be due to? That could be due to is OTC sales. What is OTC sales? That is over-the-counter sales of Bitcoin, meaning if you are MicroStrategy, BlackRock, Valkyrie, Bitwise, Grayscale, it doesn't matter, any of these large banks, people that aren't even applying for spot ETFs, institutions, or large money managers, or large independent investors. When they're buying these large blocks, they don't go and buy, typically, they do sometimes, but they typically don't go and buy on exchange, because if they're buying 10,000 or 5,000 or 2,000 or 30,000 Bitcoin, they want to prevent slippage in the market, meaning how much Bitcoin is available in the order books. There could be a disparity in what the price is when they're buying that large quantity. And it also can affect price. Maybe they want to buy 30,000, Bitcoin and not cause a bull run. Why would they not want to do that? Well, because they still have more assets and dry powder on the side that they want to stack, and they want to do it for as long as possible at the lowest price possible. And we're seeing on-chain metrics indicate that institutions are getting in, and we also see on the horizon all the things stacking up for that to really, the avenue to really be there leading into this next halving. So we are in for an incredible cycle, and there could be more pain below us right now, but the pain will only be achieved by people that are feeling like they bought in a bad position and they don't have a strategy in place to understand what their time horizon is, and that if they do buy, if it does go lower, if they don't have dry powder on the side, then you're frustrated that you can't take advantage of that lower price and lower your average entry. So the pain is really just an indication of poor strategy. Let's remember that. If you're getting liquidated, poor strategy. Shouldn't ever be liquidated. I've been liquidated. In fact, I've been liquidated for about $70,000. And this is, thank God, years ago, and it was the best lesson I ever learned in the crypto market. So let's all do a better job of not buying into the hopium and the fear and the FUD and green candles. It's exciting again, buy, and red candles. Oh my God, I'm scared, sell. No, screw all that nonsense. Look at the charts, and when the opportunities are presenting themselves and you're starting to see the indications of bigger players getting involved, then realize that the bigger players are excited about lower prices. And if bigger players are excited about lower prices, then you should have a strategy in place to take advantage of those two. Let's jump back into the charts here. Now, everybody, if you haven't yet, hit that like button, hit that subscribe button, ding the bell. Let's continue this on. Let's see. There's a couple other things I wanted to talk about before we get back into the crypto markets. And that is, we had some economic news come out today. Initial jobless claims came in at 228,000, below expectations of 235,000. Previous was 230, while personal consumption expenditures, it's us, was in line with expectations for both headline and core. Okay, what does all this mean? Well, PCE year over year, all the numbers, resilient labor market plus confirmation of inflationary uptick. Okay, what does this mean? The thesis remains unchanged. Expect more disinflation through year end. Expect labor to remain resilient and dynamic. PCE exactly in line with expectations means that the market was essentially priced for this data, but investors are working through the details. Immediate market reaction is choppy, but with the brief downward bias, yields are mixed in response, hence the indecision in stock market and futures. So there's still a little bit of question about stuff, but the stock, I mean, Nvidia just had another all-time high yesterday. Things are pushing. Markets are being interesting right now, and we need to make sure that we don't get caught in the noise and just be aware of what's going on. So let's continue on. We're going to be diving in here fairly quickly to the TA. So what does it mean? Joe Consorti says weak job openings, GDP revised down, gross domestic product, how much money the country's making. Slowing job growth. Economic data sucks, so why are the stocks ripping? Bad news is good news right now. Sour data relaxes investor fears of a hawkish Fed, igniting hopes of relaxed policy. So some of the economic numbers are not coming in to where it's like, oh, that's great. It's like we're seeing a little bit of squeeze on the labor market. We're seeing a little bit of issue with it feels like things are costing more, but some stocks are still ripping. But some of the metrics that don't feel as good are some of the direction in the metrics that we hope Powell is looking at, which he absolutely is, that will reduce the potentiality of him, having another rate hike and basically maintaining a sort of pause or a neutral sort of policy, and hopefully, in terms of monetary policy, and hopefully at some point by the end of the year or early next year, starting a little bit of reduction, a pivot in those policies. Now, it's important to realize everybody's looking forward to a pivot, and they think the pivot comes, markets rip. But there has been a lot, I'm talking astronomical amount of historical data that suggests when the pivot does come, it feels like it's a good thing. But a pretty significant drawdown in the stock market and other investment markets tends to follow. Now, things have been a bit irrational in how markets have been acting lately, so we need to keep an eye on that and realize that a pivot is not just an absolute saving grace for Bitcoin. Now, the question is going to be, at what point, whether it's this year, next year, 5 years from now, is there going to be a true break of that correlation between Bitcoin and the stock market, between Bitcoin and risk assets? Is it going to become a hedge? Well, there's no way we can know that. It's just going to be something that's going to present itself over a period of time, and then we'll have the data to see, yeah, this has been a consistent trend of Bitcoin bucking what the risk narrative is for markets. Because Bitcoin is still very tied in with what the risk narrative is, which is why we look at the dollar index and what's going on with S&P 500 and the SPY and QQQ and all these different indicators that we're hoping can give us some context about what's going on in the market. So coming back here, we're almost to the TA section. Everybody, I hope you're feeling good. Hope you're feeling grateful. I just want to let everybody know I love you all. I appreciate you. And being here with you guys every day, every one of you. It's an honor. And I'll make it my mission, and everybody that's here watching for, over the last many months will tell you this channel is about positivity. This channel is about encouragement. This channel is about strategies and skills and community. So let's continue this on. Now, Fed ramps up demands for corrective actions. This is another thing. Remember, we saw how Bitcoin performed. There was a little bit of indication of a hedge against the traditional banking system earlier this year in March when we had these cascading failures in banks. And could there be something here? Look at this. Fed ramps up demands for corrective actions by regional banks. Citizens, Fifth Third, and M&T have been warned privately by the Fed to shore up capital and liquidity planning. The Fed is ramping up its oversight of small U.S. banks. Regionals are still in trouble. So we just need to keep an eye on this. There could be something here, and we got to keep an eye on this. This is not a story we really need to go into, but just keep an eye on this, because we did see what Bitcoin did when we had the cascading failures in March. And what did it do? Let's look at it. What did it do? It is right here. This is what it did. So let's just keep an eye on that. Now, the first panacea for a mismanaged nation is inflation of the currency. We've seen astronomical inflation in our currency, in US dollar and worldwide currencies as well in the last 3 years. The second is war. What are we seeing kind of all over the globe, right? All these little conflicts. We also saw a bunch of funding go out to Taiwan through means that could be a little bit of a poking of the bear of China. Is there something going to be going off there? Both bring temporary prosperity. Both bring a permanent ruin. But both are the refuge of political and economic opportunists. Ernest Hemingway. So just pay attention. There's a lot going on globally. Now, let's just look at this from El Crypto Prof, or a mustache, whichever one you want to call it there. But this is just showing, interestingly, this is just showing the previous cycles and certain levels that price action, very important levels for price action to break through. And we're sitting right at a current similar level. And this has been that barrier that we're really trying to get through. And this is why it was such a big deal when we're looking at Bitcoin, when we had all that astronomically incredible news right here with the Bitcoin performing incredibly well with the banking collapses. And then here where we're getting the BlackRock, and then the XRP news was right here on this candle. And the fact that we were not able to break through this basically $32,000 level and hold above it. In fact, we didn't even touch 32,000. The high was around 31.8. Getting rejected here was a big deal, because it meant the bulls were not ready. The new buyers, the strength, the institutions, people that, basically the market ready to really rip to the upside. It wasn't there yet. The fuel wasn't fully in the car yet. Now this is like right here. This is when let's go ahead, turn on all the lines. This whole period right here was much like a race car driver on a track. Before the race starts, he's out there spinning his tires, he's getting warmed up. This is that first sort of, it's warming up of the engines. Now, if we come off this chart, let's come right here. Let's go to Bitcoin. The engines are warmed up. Now, once you warm up those engines, come back into the pit. Make sure you have fresh tires. Make sure you have a lot of fuel in the car. Make sure the driver's ready. And the question is going to be, how much work? Did they find any damage on that vehicle? Does it need to come down here and go into the shop a little longer? Is this going to be enough? Well, there's a lot of context there. So let's go ahead and we got a couple things we're going to go through that we're going to be diving into. We're going to be diving into, what are we talking about? TA on Bitcoin, Ethereum, Cardano, XRP, and a bunch of other coins. So let's go ahead. There's a couple things I wanted to cover here. SEC could use alternative arguments to reject Grayscale spot Bitcoin ETF. Behringer says the U.S. Securities Exchange Commission could nip Grayscale's victory in the bud using alternative arguments to reject the spot Bitcoin ETF. Analysts at Behringer Bank, led by Mark Palmer, said the regulator is likely to present concerns about the spot Bitcoin market to support its arguments. Bitcoin price could lose ground amid increasing pressures from macroeconomic data releases and SEC's next move after the panel's ruling. Now, remember, with all this going on, yes, Grayscale won the case against the SEC, but all the case really resulted in for now is a judge within our government, within the judicial system, I should say, that it doesn't say ETFs are allowed. It said the ruling that you had is not well-founded, and this ruling needs to be reviewed. So basically giving them, it's not even saying, it's essentially saying, okay, SEC, it's not that you have to approve a Bitcoin spot ETF, but the way you went about denying this is not well-founded. You need to have this reviewed and, give some reasons, provide reasons that make sense, because there's nothing, let's be honest, there's nothing Gary Gensler that he's doing right now that's making sense. And people are starting to notice. In fact, I think it was Warren Davidson in Congress, or he's either in Congress or a senator, I can't remember, but in the government, basically calling for, the removal, firing of Gary Gensler. And there's people within the government, they're really starting to wise up to the fact that that the U.S. is not only starting to, but has fallen quite significantly behind the rest of the world in participating in this technology and this network and this financial opportunity. There's so much, it's national security. There's so many things that are tied in with participating in the blockchain ecosystem. And the fact that we are slow playing this is just astronomically stupid. And so I just wanted to re-highlight that win yesterday doesn't mean things are just up and away, but we have, I believe tomorrow, we may be hearing some more information, an approval. I don't think it's super likely. It's on the table, could happen, but I think there's a higher likelihood that we're going to get another announcement of a delay for several of the other spot ETFs, including BlackRock. Now, so just be patient and be aware of that. Now, Grayscale CEO also supports that, uncertain about spot ETF refiling despite huge win. So as these news stories come out, you have to understand, we're going to see the sentiment rise, the sentiment pump. This is a sentiment pump. This is not founded on fundamentals because nothing fundamentally changed. And then as that sentiment starts to evaporate, we test these levels and potentially come down and test this trend signal line. Look at this, perfectly in line with where the weekly VWAP is. So if this does drop, if this loses this level, I do think we're going to not only test back to this 25.9 region, I do believe we'll actually get a liquidity washout to the downside and provide another opportunity. So the question is going to be, what's going to happen in this zone right here? We have this dynamic support zone here on the BitLab Intelligence Indicator, which is basically that area between the EMA ribbon and we've lost the 20 moving average here on the 4 hour. We have this dynamic support zone. If we come down and lose this, are we going to come back down and, basically get bull trap, bear trap, and then sort of figure out what's going on? In addition to all of this, actually, we'll come back to this in a second. I just wanted to go through Ethereum. I'm not sure how much I believe this based on what the metric is, but Ethereum price bounce may be in the cards. On-chain data says sentiment data indicates that wallets are disposing of their ETH coins at lower prices. Historical data suggests that this could lead to a price bounce for Ethereum. From a technical standpoint, if ETH is able to close a daily candle above 1715 within the next 48 hours, then it may continue to rise to 1850. Well, we'll look at Ethereum in a second and talk about that, because I do think right now we can look at the technicals on ETH, but I do think the technicals are also going to be in support of the direction that Bitcoin moves from the position it's in now. So we're seeing this essentially as that sentiment doesn't have follow through. Remember the BlackRock pump in June? Was it June or the BlackRock pump? That was a sentiment thing because all it was an application, something that may happen. So it increased sentiment. It wasn't a fundamental shift. So as people, people trade the sentiment and then take profits. And because nothing fundamentally changed, there's not support for bringing more fuel and more buying pressure in to continue higher because it's still speculation. So in this case, this leads directly into the next thing I wanted to talk about, which I'll bring up in a second because I wanted to bring this up first. Also, BRICS nation, Saudi Arabia plans $1 billion investment in future finance. So we're starting to see not only the BRICS stuff we've been talking about for many months here, but also there's been comments and speculation and also a discussion within the BRICS nations about, not only, I don't want to say abandoning, but moving away from using the US dollar as their trade, what backs their trade deals, but moving into things like gold and Bitcoin as well. And now we're seeing a strategic commitment from Saudi Arabia's $1 billion BRICS pledge. Saudi became a part of BRICS, which now also includes Argentina, Iran, Egypt, the United Arab Emirates, basically the majority of the large countries, the rest of the world. They're sort of ganging up. They're collaborating in opposition against, some of the decisions that we've made here in the U.S. and not wanting to use the U.S. dollar. They want to use, especially with all the sanctioning we did of Russia, that put a huge warning, target on our back for why would other countries want to use the U.S. dollar as, the backing of their trade deals if they could be sanctioned on that for decisions they make that have to do with their country. This is one of the reasons why Bitcoin is so phenomenal. The country is making waves in the economic circles. It's earmarking a staggering $16 billion from its foreign reserves to invest in the bloc's initiatives. This move isn't merely an indicator of intent. It drained Saudi Arabia's reserves to the lowest point since 2009. So what does this say? This is a pretty substantial investment, as well as kind of like putting their money where their mouth is. There's not speculation around this. They are investing in this, the future of finance, which is blockchain and Bitcoin and the crypto, the digital asset ecosystem. So let's talk about this. Where is the chart I wanted to show? Is this it? Yeah, so here we go. So September, on the thumbnail, we're talking about the sentiment. We're talking about the sentiment does not alone provide fuel to continue higher. We know this because if we look at Bitcoin's price, if we zoom out, let's go to the daily. If we zoom out and look at this essentially double top that we had on Bitcoin in April 2021, and then, the Chinese mining ban sell off, rebound back up. On the rebound back up, everybody thinks we're absolutely going to break 100,000. We're absolutely going to get up to, 180, 200, so many people in the space thought that. And here in November 2021, we had, essentially regionally a double top. If you look at this on an M2 money supply adjusted chart, we actually did not get a higher high based on inflation, which is interesting because here we had the high here, but adjusted for inflation, this was a high. It's just bizarre with how much money was printed that this actually, on a dollars basis, created a new high. But the point here is this was a sentiment hike. This was a lack of selling from long-term holders and a huge amount of illiquid supply, meaning not much, basically a supply shock on exchanges. No sellers willing to, no long-term holders willing to sell. And so we're getting a push up here just on speculation because there's no different fundamental news in all this. In fact, we had the Chinese mining ban here and a lot of different things, a lot of things going on in the world. So this was a sentiment hike that ultimately failed. Now, where we're at right now, we had this sentiment hike here, the sentiment push higher, sentiment pump with no fundamental change. It was just a possibility of something, which is the Bitcoin spot ETFs. That fire was reignited. And as Anthony Pompliano pointed out 10 years ago, over 10 years ago, the Winklevoss twins have filed for an ETF. So this is something, it's just a stoking of the same talking points within the markets for the last 10 years. But now it's more real because not only do we have time and history on Bitcoin and institutions around the world participating, and BlackRock, the largest asset manager on the planet, getting involved, now it becomes a little bit more real. And this is being talked about at the G20 Global Summit, with world leaders talking about Bitcoin and digital assets and creating regulation. And I mean, all these, I mean, it is not only in the zeitgeist, it is part of the mainstream narrative and talking and discussion now on, government bodies around the world on a daily basis. And then we get BlackRock coming in, but still the fundamental shift is not there. This is why fundamentals, on-chain data, and then technicals that you want to look at. So where we got right here is a reignition of this same sentiment, because the only thing that happened here is Grayscale won the argument, won the case against the SEC that only requires that decisions that they made rejecting the spot ETF for Grayscale to be reviewed. No fundamental shift. So sentiment pump, no fundamental shift. What's going to happen here? Could we get news tomorrow? Could something get pushed through? Could a different news narrative come in? We can't plan on new news narratives. You can't trade on the idea of hoping something, it's likely something will come in. As it stands right now, this is pushed up into this order block. What do I mean by order block? Here on the BitLab volume. We have the volume profile here. The point of control on this look is all the way up here. We have this large order block right here, which is that red block. A lot of cluster of orders and liquidity interest at this zone. And we pushed up right about in the middle way through. We also saw the Fibonacci Bitcoin pushed up right into around where the golden pocket is in the zone. And we have stopping volume right at that zone, just after this wick. And now we're getting, basically, we're on the daily, we've fallen back below this trend signal line. In fact, the trend signal line, even breaking above this, stayed red. We're down below. Are we going to get a daily closure below this trend signal line here as well? Stochastics, if we look down here on the trim fuel, stochastics, how high do they get? 75. That's into the overbought, the overheated sort of zone. Not only that, look at where stochastics still went up. RSI has already started to pull back a bit. And look at this, no new money flow interest. So we can see on the daily, we got to set up for a couple things. This does not mean it's going to come absolutely just break down from here, but we did reject at that golden pocket. We did get stopping volume. If we get a spinning top here or a doji candle right here, and we reattempt this and fail, then we're absolutely, I would argue very substantially, high probability that if we do have an attempt back higher and we have a lower high or same high, we cannot break this $28,000 zone. The top of this wick is, let me zoom in here. The top of this wick is essentially, I can put it right here. The high is, I'm looking right here, open, high, low, close. That's what OHLC stands for. Put your mouse, your cursor over that candle, and the high is 28,142. If we do get a small reversal here, another attempt, and we cannot break 28,140, 28,142, anything lower than that, then there's a very, very high chance that this is, it's very bearishly biased, because not only do we have another lower high, we had another attempt here that creates an M formation that will likely bring us back down to test regionally where this 26,130 zone is. So that's why we need to be so careful to look at this. And going into the end of the month, let's look at this monthly candle, and we got to talk about bloody September. Monthly candles, we got, we have seen this sort of candle and then an absolute push to the upside. But as it right now, it looks like we've got a pretty substantial monthly candle, to bearish monthly candle. And we can see still through all of this, a decrease in interest over time. You can see that move. Where is that at? There we go. There we go. Decrease in interest over time on the volume on Bitcoin. Now, if we come back to, where'd that story go that I just had? Here we go. This is what we want to pay attention to. Looking at this chart right here. If we zoom into this. Oops. September. Look at this. We've had 1, 2, 3 good Septembers. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 bearish, some very bearish, minus 13, almost 14%, minus 7, minus 7, minus 2, minus 40% in 2011. Of course, that was very early, so we can kind of, you know, cut out the high, cut out the low, and kind of get a better standard deviation of what's going on here. Let's go ahead and shrink this back down. But Kellam also shares a chart that shows September is the most bearish month for Bitcoin in terms of average returns. Kellam, this is Benjamin Kellam from Into the Cryptoverse, highlights that Bitcoin printed significant losses in September 2019, the most recent pre-halving year, and this September falls in another pre-halving year. Not only is it pre-halving year, but we're also coming up on an election cycle. September average return for Bitcoin is minus 7%. So do you think, I want to know everybody in chat right now, I want to know, do you think that we are going to buck the trend and have a bullish month in September? Or do you think we're going to have that liquidity washout to the downside and scare the bejesus out of everybody, providing all of each one of you that's watching BitLab Academy, providing you that opportunity to get those lower prices? Or do you think we're going to be consolidating a bit more through September? Maybe the second half would push up. Let me know your thoughts and comment down below what you're thinking as well. If you're watching, by the way, if you're watching over at Hit Network, shout out to everybody there. Make sure you head over to youtube.com/@BitLab Academy. Give us a follow here, and you know, join us. We have such a wonderful community here. And again, scroll down here to the daily alpha. We've got a lot of really great evergreen videos here. If you want to really learn how to dominate TradingView, watch this Pro TradingView guide. We also have discussion about Bitcoin and banks, and this great discussion with Dr. Jeff Ross about what it means if ETFs do get approved. And then, of course, Mark Yusko. This discussion was so phenomenal. Make sure you're watching these videos. We got a lot of stuff going on in the BitLab YouTube. And get involved in our Discord as well. Let's go ahead and do some more TA and break it down. We've talked about Bitcoin. We talked about everything. Now, I will say before we go, let's get back down to the daily. I will say before we go, as it stands right now, this is still a bullish posture. I just talked about a lot of bearish things there. A lot of bearish things. Does that mean we can't get a pump? It absolutely does not mean we can't get a pump. As this is currently set, this is still a bullish structure. If this is a bull flag, we could take a measurement from right here, the bottom of this, measure the top of this flag right here, and we can see this would take us right almost perfectly. Look at this, perfectly in line with where the previous consolidation range was. So it wouldn't be out of context for Bitcoin to really trap a lot of bulls and push up to this level and get rejected back down. It depends on what gets us there. Remember, if this pumps from, you know, a sentiment news story, and we do get that pump only to break back down, that could be a lot of pain for people just buying the hype of a green candle. So this is still a possibility. So just, I would say right now it's not a time for leverage. It's not a time to just put yourself out there and get yourself wrecked. Now's the time for letting some levels, letting some levels to develop and having have the probability stacked into your favor. So let's talk about it. Let's talk about Ethereum. Let's move this out of the way. I don't know why this is there. Okay. Let's go here. Let's look at Ethereum. How many of you in the chat right now have Ethereum? Let me know in the comments if you are an Ethereum holder. And I want to shout out everybody that's watching right now. We got 196 people in the room. Everybody hit that like button, hit that subscribe button, ding the bell, join us here. We got a wonderful community, and I'm honored to be able to do this with you guys every day. All positivity, no drama. This is all charts, talk, community. Love you guys. We're going to be going. We've been going live at 10, but in the past, but we're going to be going live from 10:30 a.m. to 11:30 a.m. every day, and 3 p.m. Eastern, both Eastern time, every day throughout the week. And Saturdays we go out. We have an interview and sometimes TA series on Saturdays. But Ethereum, same thing. This did not get as much higher. See how much this broke, had a bit more of a spread between this trend signal line. If we come down to Ethereum, we did get a push higher, but not as high. Not as high above this trend signal line. Next candle closure below, secondary candle closure below. But if you ignore the moving averages and the trend signal line, and you're just looking at the price structure, if we look at this like this This also looks very similar to Bitcoin with the potential bull flag. If this were a bull flag, we had this reversal diamond pattern, broke out above this. If we have this bull flag continue to the upside, same thing as Bitcoin, comes up right to the previous level of consolidation before breakdown. So if we do push higher, there's two things I'm looking for. I'm not, for instance, if we come down to the 2 hour and we get a little bit more clarity here, let's adjust this for where we're at now. This is, we got a bit of a trend line here. We've got, we got a little bit of a structure here. If we do break, out of this, I'm not jumping all in with 30x leverage. Hell no. We still, very similar to Bitcoin, if we do break higher, we still potentially could do this in formation and break down. We very well could consolidate sideways from here. But what I'm doing here is I'm looking for a break above this previous high of this range, and then a potential move up to this zone right here. Interestingly, not only do we have this bull flag target that takes us into the zone, look what we have. We have this previous low from which we broke down from. We also have this order block. This we can see the red box from the trend. BitLab volume. We have two order blocks directly above us and two levels. This low here and these lows here. Two levels from which we broke down from that really cascaded into this continuation and expansion of momentum to the downside. Now, if we do break this level, remember, breaking past 1740 does not mean that we're going back to all-time highs. We have a lot of work to do. And we need to be patient right now because there's a lot of different things that are going to affect the sentiment of the market, and it could swing dramatically in a moment. So these consolidation periods are not moments for high leverage and trying to get the ultimate bottoms of any particular moves. In fact, I would argue that anybody that is not, if you haven't turned $100 into $1,000 trading spot, then you should not be trading leverage. In addition to that, if you are trading leverage, I would say trends are where you really try to go and take advantage of leverage. When you have an established trend, established uptrend or an established downtrend, and I'm talking about on the daily, weekly, that's when you can really take advantage of the signals in the most meaningful way, in the Fibonacci retracements and the reversals or potential pullbacks. And then continuation up. That's where you can really utilize your skills to really make the most of taking risk, because your risk is somewhat mitigated by the fact that you have an established trend. Right now, look at this on the 2 hour. This is just, there's not really a trend to take advantage of, to really take advantage of a move. So, we're leaning a bit bearish here on the dashboard here on the BitLab Trend Fuel. Now, if we come down to Cardano, pushed up, deviation above both these trend lines, this smaller time frame trend line, this medium downtrend resistance trend line, deviation above, rejection. Where this rejection happened? Right at this level. Okay. Now, we didn't even bounce at this high here. This would have been a potential if we pushed up, found support here and bounced. That would indicate continuation to the upside. No, we fell right through that, right back below both these trend lines, came back up, getting rejected here. And so really what I want to see is, you see, where's my cursor or my paintbrush? This order block right here, this green order block from the BitLab trend volume, the BitLab volume. And these previous lows, we could see I have it marked right there. But this order block, if the price action on Cardano loses this order block, I think we're coming down into around the low 25s. Now, if we're able to hold here, maybe this is a little bit of a bull trap, come back, another opportunity, and then breakout. But I think it's all really going to depend on what the sentiment engagement is going to be around the news stories that do come out, the decisions that are made here in the next couple of days. And also going into September, remember, it's a relatively bearish month. A lot of times, remember, it's not just that September is bearish, so things happen. You have to ask yourself, why is September typically bearish? We have people, we have institutions, institutional traders, smart money, professional traders coming back from their summer vacations. We have, there's seasonality to trends that happen in asset markets. And so usually it has a lot more to do. And look at this. Not only do we have this order block right here, look at this head and shoulders pattern. So if this is the case, measure this from that neckline. This takes us all the way down. If we were to break out from this, and the neckline is actually just barely above this these order blocks. But let's call the order blocks for the true support. My screen's not up. My bad. I got screwed up. I'm just letting you guys know because I'm gonna get a bunch of dings in my ear. Your screen's not up. So we see this head and shoulders, and we can also see that if we lose this neckline, I'll be a little bit more forgiving. I'll look at this order block region right here. If we lose that, then I do think there's room for a little bit more of a move. Why is this not? There we go. If price action loses this zone, 25.9 to 25.8, I do think we're likely coming down to that 25.1. The question is going to be, are the bears going to really break this previous low and continue lower? But this is the level I'm looking at if we do break down from this head and shoulders. Now let's look at a couple more things. What's AVAX doing? Same thing, head and shoulders. So if this, we broke down from this sort of trend line, but here's our, this is kind of an ugly neckline, but let's call it just this order block right here. If we lose this level, I'm looking at coming down to 992. And if we lose that, then possibly down to the 970s. Now, if we come down to XRP, what's XRP looking like? Not quite a head and shoulders, but very similar sort of setup here. A lower attempt, higher attempt, getting rejected, creating these two order blocks. Now look at this, getting rejected the order block, rejected the order block, increasing momentum to the downside. So I'm looking right here for XRP coming down to 51.5. If we do lose 51.5, then I'm looking at coming down to 50 and then potentially down to 48. Now, Quant, what's Quant looking like? Little bit similar sort of structure. If we lose this zone, then I'm looking at coming down to, oops, I'm seeing with the price potential, God dang it. Option J. If we lose this order block, which we're really testing the support, I'm looking at coming down to the 98s and then potentially 97 and ultimately potentially down to 94 if we do have the markets breaking down. H-bar, what's H-bar doing? We haven't looked at H-bar in a while. Man, we're looking, these are the 2-hour charts on all these, everybody. Getting a little bit bearish on the trend signal. We have the stochastics starting to roll over. We're getting a little bit of a increased momentum to the downside. We've already lost this level, this previous range, this previous bottom. So where's next? Well, I'm looking regionally right there and right there. Now, if we come here to delete these old, delete these old Fibonacci's. Too many lines on the chart. So if we've kind of already breached a zone, this is indicating to me a likely move down to 51.4 and then potentially down to the 50 cents. And if we lose that, then it may get a bit more ugly. Matic, what's Matic doing? Man, look at that. Tested all the way up, short of this order block region. Came down. This is what I was talking about on Cardano that Cardano did not do. This looks more bullish than Cardano because this came down and found support on this previous range high. So if this currently, look at this. I guarantee you this is right into the golden pocket. Look at that. Came down, bounced on the previous high, retrace up to the golden pocket, rejection, and a loss all the way back down here. This is indicating to me this bounce and rejection here, ultimately within this 2-hour candle too, mostly wick. This is, and look how fast this moved down. I'm looking at testing back down here to 56.75 and then potentially down into this sort of region where the point of control is on this chart, around 55 to 56 cents. If we continue, we could talk about lower once we sort of lose that level, especially if we lose 55.3. Next level from there would likely be down into the 52s. What else we got? Link, how's Link looking? I haven't looked at this in a couple days. Order block, look at this. Pushed up, couldn't even get to the order block. Rejection back down, didn't even find support on this range, these range tops right here. Didn't even find support, fell right through it. Now it's finding resistance. This is indicating bearishness to me. This is indicating to me that it's trying to come down and test this 583 sort of zone. And then if we lose that, coming down to these order blocks from these previous levels over here, which would be down here in 555 and potentially down to 540. If we do push higher, we have to basically hit all these levels. We have to break through 628. We've got to break through 644, and then we could talk about going higher. This is not looking ultimately bullish to me. So we can take a trend line right here from this rejection, rejection. If we do push higher, I'm looking at a rejection or a test of resistance at 615.18, and then maybe this squeezes in this zone here. But even if this squeezes in the zone, this is looking a little bit like is it a falling wedge? It's a bit of a falling wedge, but regardless, I think if this does push higher, which it doesn't look like it's trying to right now, we have this order block and this confluence of this downtrend resistance right here at 611, likely rejection back down. If we lose this level and this level, then that's when I'm looking to the lower side. Let's look at Phantom. What's Phantom looking like? Phantom pushing up, a bit of a rejection right here, found support on this previous high. So if we can test up here and break that, maybe we continue the upside. If we lose this level, we have this entire order block, but I do think that we're going to be coming down, likely testing. If we lose this this regional zone right here, come down, lose 20 cents, I think we're coming down to, sorry, that's not 20 cents, 20.9 cents. I think we're coming to the low 20s, 20.4, and then potentially lower. Now, I know some of the AI plays, some of the AI plays had a bit of a nice move. So this looks very similar to Phantom that we just saw. So we've got this zone right here. We've got this zone right here. This got rejected right inside this order block from over here. Got rejected and the previous high. Regionally, kind of, just like that. Wick came up to that zone. We have a secondary order block right here. This got rejected. It's currently in a bullish structure on this most recent move. So if we can hold this level of this bounce here, this rejection here, and this rising level of support, if we hold this level, maybe we test back up in here. If we get a lower high or we cannot clear this zone, potentially, I do think this is coming down to test 18. What does that say? 18.15, and then potentially down to, and we see the momentum starting to roll over down to 17.3. Now, what does fetch look like? I cannot type with my, God dang it. I have no room on my desk. That's what it is. So this is looking kind of similar to what we just saw in AGIX, pushing up into this zone, order block right above, got rejected. Currently, this is looking bullish, but as this is right here, if this retrace comes up, we have a lower high and we form a lower low on this very small time. This is a 2-hour time frame. If we lose that, then I do think we're going to come down and test back into 20.62. So let's just pay attention to that. If we are able to push up and break this 25.7 on fetch and then potentially 26.82, then maybe we're going to push higher. But as it stands right now, everything, I mean, in reality, this just looks like it's really, God dang it. Why can I not type a damn thing today? Option J. There we go. My keyboard's all jacked up. I think that's what it is. So as it stands right now, it does look like we have a bit of a range. So if we lose this level and reject, come down, I'm looking at 20.5 cents. If we lose that, then potentially testing down here to 17.31. But as it stands right now, this is, yeah, everything's just kind of hinging on, I mean, look at all the bearishness on the dashboard here. So before we go, let's go ahead and head back over to Bitcoin. How come this is not, there we go. This is basically fighting that trend, trying to hold that 27,000 mark. If we do come down, ultimately, just looking at price action without the BitLab intelligence, if this does break down, we're looking at this 382, which is in line with this previous high, as well as this order block support sort of zone right below us. If we do push into this, it's right about where the weekly VWAP is as well. We see, so if we do push into the zone, if we lose, 26.7, 26.680, I do think we're coming back down into the zone. If we're able to hold this zone, even on a potential run up, don't buy this run up because we're pushing up. You're trying to catch it. Watch for us breaking above 28,140. But with that, guys, I love you. I appreciate each and every one of you. Thank you for everybody. Thank you for everybody tuning in, being a part of this channel, being a part of this community. Make sure, if you want to learn more about reading price action, understand what's going on, head over to bitlabacademy.com. The page is going to load here in a second. We got all these different courses. We have a premium Discord. We've got wonderful indicators, all the BitLab intelligence, the BitLab volume, and the BitLab trend fuel, the oscillator on the bottom. You can get that right here at, come here to indicators on bitlabacademy.com. Go down to the BitLab trading stack. I'm doing too many things at once here. BitLab trading stack. And you can use Give Me 30 for 30% off your order. Get involved with us. I love you. We're a wonderful community, and each one of you, I appreciate you. I'll see you guys at 3 p.m. Guys and gals, 3 p.m. Everybody, let's be a positive beacon in the space and all the different places that we comment and engage with. Let's not buy in to all the negativity that's out there. I love you. Everybody, have a wonderful day. Adios. Adios, muchachos. Thank you for coming. Thank you for always tuning in. BitLabAcademy.com. Hit that like button, sucker.